If you're looking at the euro against the British pound on the lower time frame, you would want to sell. And I did that. I did exactly that. I had a sell on the euro against the British pound. And looking at it right now, I kind of realized I kind of effed up real bad. So that's what we're going through in this video. Looking through the euro against the British pound and seeing the F up as well as what was supposed to be done. So before we dive into the chart, I want us to take a good look at the exact fundamentals of this market right now. First thing we notice here is that the euro against the British pound is kind of like on the downside. Not really good downside. It's more neutral, but a little bit towards the downside. However, this is where I start to have problems. The change in some product, that is the change in the recent scoring, is kind of a little bit positive. 0.1 is small, doesn't seem like anything huge. But the trajectory, that is, if you look at it in the recent 7 days of like the 7 days of this data, the average move of the 7 days data is about positive 1.9, meaning this pair has been gaining energy, right? Meaning that there's kind of like buying momentum going in this market, especially when you look at the fact that this thing cannot change if we have technical data remaining so much bearish. But then again, if you look at the data with just like across eye view, you think it's a bearish data because everything is either red or neutral except for the variance. The variance is not something that matters. But take a very good look at it. The yield is more to the downside. The leverage funds are hoping for more downside. The central bank rate is more to the downside. And then when you take a look at all information, this is now looking at all the data, all the news release, regardless of whether it is the key data or not, we have a bearish stance, and the overall stance at 49 aligned with the recent 7 days, giving us more bearish stance. So this is the way it looks like, right? The recent 7 days, we have information releases that's telling us the British pound is still a bit better than the euro. However, when we come into the history of the system here, this is where I kind of check a specific market quickly. So what I have here is everything still has a needle to the downside to an extent, to a good extent. But then I go into the COT data, right? The COT data, I want to be kind of sure what I am really looking at. This is where the problem comes in. I can see that the asset managers and the leverage funds, these are the two people that matter to me the most. The asset managers are heavily bearish on the British pound. This right side is the British pound. The left side is the euro. So you can see asset managers are heavily bearish on the British pound. And then on the euro, they are kind of bullish about it, right? Then we look at the leverage funds. The leverage funds are slightly bearish on the euro and heavily bullish on the British pound. Now, this is like conflict of interest to an extent. Now, the reason why I follow the leverage funds is the same thing I say over and over every day again. These guys are the guys that have a portfolio to manage, and hence they have reports to send out weekly, monthly, biannually, whatever, quarterly. But they have a report to send out to their investors that, hey, we're managing your money and we're making profit or we're making losses. And they tend to cut out trades that are not working and fall into trades that are working. So you see them reducing, when you see them reducing orders, like reducing their total number of contracts or orders in the market, it means that they no longer believe in that particular market much. When you see them increasing orders, it means they strongly believe in what the sentiment is looking like. And then, unlike the asset managers, these are guys who, or people, not really people, institutions, as you can see here, institutional or asset managers. These are things like your pension fund. They work like based on major seasonal cycles. So for example, they could place a trade today because they see that the government policy would feed them, and the government lasts for about 2 to 4 years. That way, their trades are not just we're buying now to, exit tomorrow morning. No, they're buying now to exit in years. But take a good look at the situation here. It's been trickling down on the euro also, even though they've been increasing their stance. Now, increasing their stance means that they are strongly believing in this thing going down slowly. But for the British pound, they also started increasing. But if you take a good look at the recent week, it seems like it's coming up. So there's a bit more faith here in the pound than in the euro. Now, this whole situation breeds one simple issue for me. It means that I expect to see the pound, either the euro against the pound, either flatline or rally to the upside slowly, not really rally, but like drag to the upside. Now, let's look at the technical data. What did I do that makes me feel like I made a huge mistake? I'm going to show you exactly what I did first. Then I'll show you what I saw in the chart that made me feel like it's a mistake. So what I did was pretty simple. I simply came into this chart, and as per the way I trade, I like to have this on full screen, and I would like to have this like somewhere in the 5 minutes. And then this is how I personally trade. And then I would squeeze this chart like this. When I squeeze it, I have a very clear view of not just the 5 minutes time frame structure, but also higher time frame structure. Now, this is the same thing I traced, the Quasimodo reversal, also known as the QMR. We have this high to a clear low right here, to a high. So this was not a sweep. This was just a very good structure, but it was not a sweep. It was real clear there. But so anyways, we have a sweep to a low. And then I find price coming back. And what did I do? I decided to sell to the downside, right? That is exactly the logic I came into this market with. Again, before we do this, I have to want to see structural liquidity, right? So where do I have structural liquidity here, in my opinion? Where do I have inducements, basically? So I saw this move here as inducement. Now, this makes sense. Absolutely 100% makes sense. It was cool. The strategy fits. It fits right. However, I took this on my phone. That is where the problem is. I kind of took this trade on my phone. And then I entered the limit order. And then this afternoon, I got an order filled situation. I didn't even pay attention to it. It was until like 2 hours ago. I was like, hold on. What do you mean by order filled on euro against the British pound? What's really happening there? And I went to go review the chart. Now, this is when I would show you exactly what I saw that made me feel like this shouldn't have been a trade, right? We're going to go up to the hourly time frame, the 1 hour, right? So on the 1 hour, the same method. You squeeze the chart until almost everything is visible. And what you can see here is the first situation. This market is in a downtrend, and obviously, if I'm buying here, it would have been better if I was buying down here. But the hourly is not good enough. The 1 hour time chart is not really good enough. This is where I usually switch into the daily time frame. Now, the daily time frame, I don't need to squeeze it this much. I just need to see the recent sets of candles. Now, in looking at the recent sets of candles, I'm in trouble. I'm already seeing it. And how am I in trouble? Well, let's start from the highest high here to the lowest low. And this is not a correct way to use the Fibonacci anyway, but I just want to show you guys something. So this is the highest high to the highest low. Now, yes, we just tapped below the 50% retracement by standard of a full monthly scaled situation. But the correct leg I'm currently playing with, right? We have to look at the correct leg I'm playing with. And when you look at the correct leg I'm playing with, I am in a discount zone. So it's buying makes much more sense. You can see that the first time it was already below the 50%. Now it's also much more below the 50%. Buying on this place makes much more sense. I'm not saying you should go out there and buy. I'm just saying it makes much more sense. Selling here is highly risky. Now, this is where I'm about to show you how I made the biggest mistake. I was selling. Because I was paying attention to only one thing. This supply zone I have right here. That was the first big mistake I was making. And this is why sometimes they tell you don't trade on your phone. Try to use a bigger screen, or you flip your phone around and squeeze it up, open it, squeeze it again, open it, and see what is really happening in the markets. I missed context. That is the first problem of this trade. So you can put it up at the number bar. Number one was a total mix-up of context. Number two, what is mistake number two? Well, when I realized this mistake, the first mistake I had made, I immediately went into this market and I went to look at it again. Yes, it fits everything I need. And this is where the second problem is. What I had marked out as structural liquidity or inducement was literally just a fuzzy pullback. Should I call it fuzzy or funny pullback? You can see it's already tapped into this area. So the only thing I would be able to actually use, even if I wanted to take a trade here, right, the right thing to have done was to aim for this other block instead, not the already used or mitigated other block, but was to aim for this one right here. So if I aim for this one right here, this is where the next big situation comes. So the first one was context. The second one was wrong zone selection. What is the third issue? Well, the third issue is confirmation of intent. Now, I'm drawing this from the 1 hour, right? If this is a drawing from the 1 hour, I am supposed to confirm intent of buyers or sellers in the market. I'm not one of those traders who wants to get the aggressive entry. I'm not even supposed to be aggressively entering the market. This is where I noticed the other big error. So if I go down into the 5 minutes and I want to confirm intent on the 1 hour, mind you, the trade was entered on the 4 hours from the situation I had there. So I'm supposed to actually be on the 15 minutes. On the 15 minutes, what is my confirmation of intent? I'm supposed to have break of structure to the downside, sweep, break of structure to the downside, and all that stuff, right? Because I entered with aggressive entry, I did not get the chance to do the confirmation, but this is also a third mistake. On confirmation situation, take a very good look at this. I have this low, which was swept, obviously. So I would say this high, sorry, which was swept. And I'll say this low is reasonable. This high is the high, and this is a good low, right? Well, this is what most people think, but this is not actually correct, right? This is not correct. Personally, I don't want to stress myself thinking of where market is supposed to bounce back from or not. So what I usually do is, you see this guy right here, it's called an RSI. It's a standard RSI. I just made a better one where I had both the higher time frame and the current time frame in it. So inside here you see it's just telling me what the higher time frame is. So I set it to auto, it automatically calculates based on the time frame. So if I'm on the 15 minutes, it is literally calculating the 4 hours RSI for me and putting it up here. So RSI, what is it? Relative strength index, trying to determine what is the actual strength of other traders or the total candles that has happened in the market. What I did was I looked at this RSI and I set personally, I love my RSI set to 34 on both of them. So the current time frames RSI is at 34. The higher time frame RSI is at 34. At 34, I get one of the best sets of signals. When something goes bearish, it is clearly bearish. Now, not just if it goes bearish, there's a degree to which it goes before I agree. I have to see the number cross below 47. So I need a 46 point whatever and lower to sell. And I need a higher than 53 to buy. So I need a 53 and whatever to buy. If I was supposed to enter this trade with confirmation entry, I would have been a bit safe. I would have not entered the trade yet. Even if I made a mistake with the zoning and the context, this third one was supposed to be my safety net. If you take a good look at this RSI, right here where my hand is, right here where the handle is, you can see where the cursor is right now. If you look down at it, you're going to look at these lines, these numbers here. The first number is for the standard RSI and the second number is for the institutional RSI. That is the higher time frame RSI. And then when I put my mouse directly here, you see it is at 48. It is not below 47. I need a 46.99 minimum to start selling in this market. I have literally breached all 3 steps. Number 1 was wrong zone selection. I selected the wrong zone because I did not have a good structural liquidity. Number 2 was a failed context. That is, I did not get the proper context of the market. This market is literally in a discount area, and here I am trying to sell at discount prices. The third issue is I did not even run a confirmation entry method. Therefore, I could not spot that sellers had not entered the market before my order got filled in. Even though I did an aggressive entry, I still look at this as a third error. Now, what is my safety in this market? Well, the only thing I have here left in this market is to rely on absolute luck. anything that happens in this market that leads to profit is not based on proper trading, it's based on luck, nothing else. So if this leads to profit, it's a lucky trade rather than an actual trade. It's not a proper trade. So this video is just to advise you guys, always check these things very well before you place a trade. I'm going to make a loss on this trade. I am most likely going to make a loss on this trade, about $10-15 or so. I'm going to make a loss on this trade. However, I'm still going to keep it in my journal that, hey, you made this mistake, you're going to learn from it, and that's the way you get better as a trader. See you guys in the next one. Peace.